as the bond market takes control again, with the yield in the benchmark 10-year trading, well, down to 0.91%. What the heck are you supposed to do if you're an investor who wants income? Bonds are safe, but they're paying you next to nothing. And while many stocks have big dividends, some of them are high riskier. So what's usually a safe place to put your money during a slowdown? The utilities. Utilities like American Electric Power. AEP is an Ohio-based utility that owns the largest power distribution network in the country, along with a bunch of power generation assets, including a growing portfolio of renewables. While the stock doesn't exactly have a monster yield here, of course, because the stock's going up so much, it's got a 2.8% payout. Well, let me just say it's a heck of a lot better than T-bills, which could be headed for negative rates, and the economy's slowing. But do not take it from me. Let's check in with Nick Akins. He's the bankable chairman, president, and CEO of American Electric Power. Get a read on how his business is doing and where it's headed. Mr. Akins, welcome back to Mad Money.
Hi, Jim. Great to be with you again.
Well, it's great to be with you, Nick. Now, I tell people that they should be in AEP, as you know, I don't know, what, about 100 times a year, maybe more. And one of the reasons I do that is because when rates go down, and even if there's a little bit of slowing in the economy, you can still beat your numbers, which you have consistently. And I think people kind of just think it's magic, but it's actually the way you guys run the enterprise.
Well, that's exactly right. I mean, I characterize it sort of as a variable fixed swap for our shareholders. There's a lot of inputs that change, weather, investments, everything else. But in the end, we wind up being very consistent from an earnings and dividend profile because of the kind of business that we're in, plowing money to really invigorate our customer experience and improve the infrastructure that serves this nation.
Now, there are some areas in your, in your coverage that are where they're not as strong as the GDP. And yet, so people might think, well, wait a second, there's no way that Nick can make the numbers. He's actually a little bit below the GDP. In some areas, there's less industrial. How is the mosaic possible that you can beat numbers even though you say yourself in your own documents that you're a little bit light of GDP?
I think you can translate it to the electrification of society. I mean, we see transportation growth with electric vehicles. We see, obviously, different sectors of the economy throughout this nation. We serve a large footprint of the nation with a very diverse set of load profile characteristics in that, with our residential, commercial, and industrial customers, and sectors within that economy continue to grow considerably. Oil and gas continues to grow, transportation relative to oil and gas, hospitals, education. Those are growth areas for us that continue to advance. So, and our investments drive our continued growth. We spend about $7 billion in capital every year focused on infrastructure and refurbishment of that infrastructure. So that drives consistency in the returns that we deliver for our shareholders.
And can you take advantage of these low treasury rates because you've got such a great balance sheet to be able to get a good price for the money you need to be able to constantly build?
Oh, that's right. There's certainly a balance sheet expectation there that we deploy capital in a very efficient sense, and we have plenty of places to deploy that capital. As you said, the largest transmission system, the largest distribution, and certainly with what's going on with the advent of renewables and clean energy technology, there's plenty of areas for growth that we're investing in. All
right, so Nick, let's say we close the schools in your area. Let's say people are supposed to work at home in your area. How will that impact American Electric Power?
Well, it's really interesting because we have the most margins in our residential sector. So if people are actually working from home, we may actually financially be very secure from that perspective because of the margins that we get from the residential versus commercial and industrial. So as we look at our economy, and actually we haven't seen that much impact to our economy because most of the coronavirus activities would occur in large metropolitan areas, and we're more mid-sized cities and rural areas. So we'll probably see much more resiliency in our territory as a result of this ongoing coronavirus issue.
No, I want to ask you about a niche business and whether that could threaten AEP someday. We have a Generac on, which is you take solar power and you are able to put it in a battery. It's niche now. Is this something that AEP worries about, that they see individuals kind of disintermediating AEP and having their own electricity?
No, absolutely. We plan on being a part of that. We're putting in microgrids. We just put in a solution at Notre Dame in partnership with Notre Dame, a solar facility. We're actually doing that around the country in 38 states. Doing different solar, wind projects and storage projects as far away as Hawaii. So there's really plenty of opportunities for us to engage with customers, creditworthy counterparty customers that really drive continued growth for us as well. So we're not afraid of that. Matter of fact, this company is in a very firm foundation from a financial perspective to be able to focus on those aspects of the future that make sense for our customers and the engagement with our customers.
And I always tell people when people say, well, Jim, these utility guys, I guess they just like coal or something, that I know Nick Akins, and Nick Akins has done his absolute best to have as much solar, but particularly wind, as possible. And it looks like you got another chance here, and maybe this one won't be threatened by the interests who don't want you to do wind.
Yeah, our North Central project in Arkansas, Louisiana, Texas, and Oklahoma, that is well on its way. We got approval in Oklahoma. We expect to get approval in Arkansas and Louisiana as well, and certainly Texas most likely will follow, hopefully. So, but even that project now is at a point where that project is a go, and it's the fourth largest in the world if you take all three of these projects together. So very definitely on the regulated side of our business, the transition that's occurring to a clean energy economy with renewables and other activities are certainly coming into play.
All right. Well, look, let's leave it there because that's about the most hopeful thing I've heard in the last few weeks. That's Nick Akins. He's Chairman, President, and CEO of American Electric Power. Nick, always great to see you.
Thanks, Jim.
See, there are stocks you can own. I've been saying that there is a bull market in utilities. I know you want a bull market in the industrials, or maybe you want a bull market in the banks. You got to take it where you can get it. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.